Hi, good morning. You're watching the market right here on 18 now, back at 18,700. So seems like the mojo after a long hiatus of consolidation seems to be getting back somewhat. The good news, of course, on the global front also is that the US CPI has cooled off, and both the S&P as well as the Nasdaq have ended near 14 months highs. So we're getting good support, at least from the global front as well, and it seems like Fed is in for a pause once again. So the construct for our markets to scale up a new peak this time around seems to be stronger.
There's a difference between sip and a lip. I think that's the story for Indian markets. 11 days, the new high is coming. You don't know the date. I hope it happens this week.
Lip.
Cup and the lip.
Okay.
Did I say it wrong?
Sip and the lip.
Sorry, my bad. Early morning, sometimes you get confused.
You haven't had your morning coffee yet.
No, I had a late night.
Oh.
Family's traveling, so you get some bachelor time.
You are accepting that on the national television, you know that, so you'll be in trouble.
No, I was traveling. Bachelor time with friends and family. Let me specify.
Okay, without getting into details, back to markets.
Okay. No, see, you don't know when that new high is coming. And I really hope, looking at the construct of the market, that we have a print of new high on the Nifty this week itself. And it's not about Nifty. It's about the global construct also, which I think is very important. Mother market, or the major market, which is the US market, Nasdaq, is at a 14-month high. Other emerging markets are also showing signs of optimism. So the broader construct for equities, I think, is strong. In that, India is outperforming. We may have consolidated for last couple of days, but that really does not change the construct of the market. I've said it before and I'll say it again, the best of the summer rally 2023 is not over. The flows, I guess, are real, and the flows are here to stay. And for me, the market will only hit a pause button or will retreat when the supply is much more than the demand. And I think we are not there yet. When I say supply will be much more than the demand, it has to be because of QIPs, IPOs, FPOs. That cycle has started. Those whispers have picked up. Fund managers and investment bankers have started the narrative, but we are not there yet. I think that process will start in the first week of July, when the IPO market, the FPO market, and the QIP market and the block deal market will be throbbing. For me, that would be the first sign and indicator of markets why it should go down. See, why will markets come down? Fundamentally, something has to change. Liquidity has to reverse, or demand-supply mismatch has to change. Fundamentally, I don't think there's anything on the horizon.
And the market still lacks that exuberance which you typically see at a peak.
Yeah, it's not there. There's no participation. There are a lot of naysayers. They always say that markets, they always climb the wall of worry, which they've managed to do it. They'll come down on the ray of hope. And what is the ray of hope? QIP, FPO, and block deals. So that is the ray of hope, where the promoters are excited, where managements are taking the companies public. So I think we managed to climb the wall of worry. Phase 2 is to come down on the ray of hope, and I don't think we are there yet.
Okay, we are not done yet. That's the word coming in. The best of the summer 2023 rally is not over, and today as well it's likely to start on the front foot, given the fact that SGX Nifty is suggesting that we are likely to head higher. And this after, of course, the US markets closed in the green, and the Asian markets too have managed to pick up. And this is continuation of what we saw yesterday, because yesterday as well there was a solid momentum on the Lal Street. We saw a gain of over 100 points on the Nifty. It closed above the levels of 18,700, and the good news was that the heavyweights were the ones that really participated yesterday. So Reliance was the one which finally made a bit of a move. ICICI Bank too was up around 0.8%. So finally getting out of that slumber that all of these heavyweights were in. Having said that, no Nifty 50 stock is sitting at life high. Remember, Nifty is just 170, 150 points away from that all-time high level, but none of the Nifty stocks are yet hitting an all-time high level, and it's the broader markets that continue to show quite a bit of outperformance. And of course, Realty Pack 2 was doing quite well. Nikunj, your take as to when do you see those heavyweights also participating, if at all? Because that's been the missing link in the market.
Imagine when they participate.
Yeah, that
if a Reliance chips in, if an SBI, which is in hibernation, that comes back again, HDFC Bank, TCS, Infosys. Yeah. Now you can argue and say, okay, tech has got its own issues, but there are no challenges with HDFC Bank. There are no challenges with Reliance. So will the last hurrah in this market, will that be led by these
The
heavyweights? And I think it has to happen. Theoretically, it has to happen. An ITC or perhaps an Tata Motors cannot really be the flag bearer of such a powerful summer rally. Now, you don't know which end of the market is going to be driving and which end of the market is going to be lagging. Right now, it's Reliance, Infosys and HDFC Bank which are lagging the market action. But I think it's a matter of time. The relative valuation gap between rest of the market and these 3-4 stocks, I think, is going to be so large that at a time when liquidity is benign, institutional investors would be forced to kick in. But that's a very interesting data. FI long and retail long. These graphics looking lovely. FI long is 51%, retail long is 51%. Now, what does that mean? That means that the orientation in the market is positive, but it is not euphoric. Typically, markets peak out when the number goes to 65, 70, 75%. So there are no signs in the market based on historical data or based on previous trends, which in a sense will justify that we are nearing a euphoric peak. Euphoric peak happens when there is mass participation, when there is a wild movement in penny stocks, when markets they start assuming earnings will be linear for FY 28 and 27 and 28. I don't think we are there yet. And IPOs have not started. Demand and supply mismatch has to happen. I'm going to stick my neck out, mark my words. This market will only peak out when the IPO market and the QIP market will start. That will start soon. Yeah. But that'll start in July.
When your Mama Earths and Oyos who are long in the offing and in the pipeline, they come.
Yeah, just think about it. See, when the market conditions are tight, the merchant banker will take it easy. Yeah. And typically, when market peaked out in 2021, what were the factors at play? Fintech with crazy valuations, it went public. Consumer tech with no earnings, they started going public. Paytm had the largest issue ever for a loss-making company where the prospectus said that we will never ever make profit. They went public and that was the largest issue, which was preceded by Zomato. Then after that, you had Policy Bazaar and all of Nykaa. It made Falguni Nayar the richest Indian woman, at least for a couple of days. Are we there yet? I don't see those stories. I don't see that euphoria and I don't see that participation. Every morning we are just hoping and hoping that when will Nifty touch a new high? That's the narrative. That's my limited point. I could be completely wrong, but I'm simply based on what I've learned from masters and what I've seen over the years.
If you were to just take the net move on the Nifty, I think it's pretty apparent that the buoyancy is in the broader markets as opposed to the index. The index has climbed up less than 3.5% year to date, whereas the Midcap index has seen a faster recovery. Now, you can also talk about as to how in 2022, the mid and the small cap indexes underperformed as well. So a faster catch up in that sense. But the Midcap index almost a 10% move year to date, and the small cap index has climbed up nearly about 9%. What's happening within the benchmarks, that's quite the contrast that's happening within the broader markets now. It's the underperformers which are actually playing catch up. Nikun just talked about Paytm. It's actually gained 55% this year already. Aurobindo Pharma, one of the rank underperformers within the pharma pack of 2022, 52% move. PB Fintech, again, got clobbered in the entire new age tech fall, has already gained about 42%. PFC up 41%. CG Power up 39%. And it's quite intriguing that, besides these beaten down tech names, Nikunj, the market texture is changing. I mean, the gainers, even within the broader markets, are PFC and CG Power. Who would have thought?
Yeah, so you just connect the dots here. CG Power, PFC, what is the common theme here? Power. What is happening to power consumption? It is growing. What are some of the smart guys like Prashant Jain advocating in terms of a thematic theme for FY23, FY24, FY25? Power. So power is going through a major change in terms of demand, in terms of the change of, the character of the sector has changed. Demand, the health of utilities, how the consumption patterns are evolving, and given the way how the financing has moved. So anything which has got to do with power utility, which is generation, companies which are in equipment supply or manufacturing, or companies which essentially are financing this entire power universe, I think that space is simply going, gangbusters. So the common theme here is power. Of course, fintech and consumer tech is making a comeback. I think the the dark horse here, which we're not talking about, is pharma. We're not talking about it. But deals have started. Promoters have learned the hard way that what you got in terms of assumptions and growth in COVID, that was just temporary, that sugar rush is behind them. They've learned that US generic market over dependence is not going to be, is something what you don't want to depend on. I see a big difference happening. I think the formulation companies will do well. I think action will shift back to some of the domestic denominated pharma companies. So if you're asking me for a theme, power is a theme, and pharma companies which are in the business of formulation, which are domestic oriented. That's another thing we should want to monitor.
Okay, so that's about the micros of a couple of sector, power as well as pharma, but it's time now to look macro as well, and at global macros at that, we have Mr. Ed Yardeni, the President and Chief Investment Strategist at Yardeni Research, joining us on the show. Hi Ed, thank you so much for making time and speaking with us. Well, the CPI data for US has been declining for 11 months on the trot. It came in lower than expectation. Do you think that, entire worry about inflation is behind us, and hence a pause is what is likely to happen later tomorrow?
It seems that since October 12th, any day without bad news is a good day for the market. There's a lot of bad news that was expected that just isn't happening. We're not having a recession. We're not having a credit crunch. We're seeing inflation continue to moderate. And now I think the expectation is that the Federal Reserve will probably skip raising the Fed funds rate at the meeting tomorrow. And that there might be another increase in July, but I think the Fed is done. The Fed wanted to get restrictive. We're at restrictive. They're going to keep it there, and that will be high enough to bring inflation down without an economy-wide recession.
Is it too early to assume that the Fed actually has won the war against inflation?
Well, it hasn't won the war against inflation. The Fed has made it very clear, really, over the past year, that their intention is to get the Fed funds rate up to a restrictive enough level that they could keep it there, and that over time, that would bring inflation down. They're aiming to get the inflation target down to 2% by 2025, so they're not rushing it. They're not saying we've got to get there 6 to 12 months from now. If the goal was to get down to 2% in 6 to 12 months, then we have to raise interest rates a lot more. We have to have a recession, and that would be terrible for the stock market. I think the Federal Reserve has made it clear that they want to be more gradual about it. They don't want to destroy all the progress that's been made in getting people employed. And so I don't think they're going to declare victory on inflation. They're going to say that they've gotten to where they want to be with the Fed funds rate, and they're going to keep it there. Remember, the markets have been anticipating a drop in interest rates, and I think increasingly the Fed has succeeded in convincing the markets that interest rates are going to stay high.
Ed, great to have you on the show with that quick take on what to make of the inflation print and, of course, what to expect from the Fed tonight. Let's move on. The SGX Nifty, of course, is indicating a mildly positive start, so not quite in tow with the global handover, but let's see, the momentum is on our side. Let me take it across to Vinny, find out what the global commentary this morning is like. Vinny?
Good morning, and let's start first about talking about the UK mortgage, and we have a commentary that is coming in from Mohammad El Arian, and now what he's highlighting, that seems like there's more bad news coming in for the UK mortgage market, because in terms of the inflation data that came in, seems like the 2-year UK yields also, when you look at it, that surged higher than what the street was expecting as well, and that was a bit more hawkish on that side from Bank of England. They're anticipating that Bank of England will be a bit more hawkish. That could be a bit of a worry coming in for the mortgage market in Britain, especially that would bring some more pain to the household factors in terms of more faster and more pervasive as well. So that's one factor that Mohammed has highlighted today in terms of commentary. Other than that, we have another commentary that is coming in from him, and that is in terms of the US inflation data that has come in terms of that. What he's highlighting, that the headline numbers, the core headline numbers, were better than what was expected, and there was with such numbers that have actually come in, they would expect that very hard for Fed to actually not validate in terms of the last policy guidance of a skip, that it keeps the rates unchanged, and that will be obviously in terms of the overnight, the decision that would be seen coming in overnight today. That is something that we're watching out for, and maybe possibly open a door for a hike in the month of July. So that is another important highlight highlight that has come in from him and commentary that has come in from him. Moving on to Peter Schiff, now what he's highlighting, there's a slight improvement in the May CPI data that came in 4% on a YOY basis, the rise that we're seeing coming in versus, obviously what he believes is that that 2% number that was there, we could actually come back to that number anytime soon, and maybe that 4% mark is not something that is sustainable, is what Peter is highlighting in the commentary coming in. And maybe that weakness in the economy, that is a factor that is a concern that is coming in from him. And lastly, we have a comment that is coming in from Holger, who's highlighting on the US inflation data as well. What he says that yes, it is in line with the street consensus estimate as well. On a month-on-month basis also, he's highlighting about the increase, and although the CPI number is more mixed on a YOY basis, but overall it seems like for the street it was an inline set of numbers. So that is a commentary that has come in, most of them highlighting that US CPI data that has come in.
Now, what are the set of cues we are working with? Markets are less than 200 points away from an all-time high. FI selling has been strong. The participation in mid and small cap stocks is encouraging. The handover from global markets is decent. So are we likely to make a new high today, this week or next week? But a new high on the market is coming soon. So Kunal, will today be that day where Nifty will have a new print of new high?
Let's hope. I think it's been a long time. I think it's been 30 days since the Bank Nifty hit a new high.
30 दिन हो गए?
Yeah, almost 27, 28 days. So I think in that regards, let's hope that the Nifty also hits back towards the life highs. But I think the momentum is quite strong. No complaints, on the internal market setup. We've seen good build-up of open interest, even in the last 1 to 2 weeks, where there has been slight choppiness on the indices. The Nifty yesterday scaled past about the 18,650 mark. So I think that could be a sort of an indicator that we may probably come out of this 10, 11 days of consolidation for the index. The only concern for the markets as of now is the Bank Nifty underperforming or still not breaking out of that 44,000, 44,400 kind of a range. So maybe that could be the only reason why the momentum is not quite strong. But then no complaints as such. As I said, the market internals, the mid-cap index, the small-cap index have been doing pretty well. There are many sectors which have established their breakouts. So all of that augurs very well for the markets.
Okay, all of that augurs really well for the market, and if you go by SGX Nifty, we are likely to head higher today as well. 50-point uptick is what we are witnessing. But Rajesh Palve also joins us on the show. Rajesh, what's your take on the Nifty? When are we hitting those life highs?
Yeah, good morning. So sooner or later, possibly next week, we are going to have a new all-time high for Nifty, as Nifty is having major call concentration at 18,800, 700 strikes still. But yes, some short covering action was there in the previous trading session. So if we continues to hold above 18,700, 750, then possibly another round of short covering can be there in Nifty, and then that will help Nifty to scale to the new all-time high. So yes, possibly yes, post this weekly expiry, we may hit a new all-time high for Nifty. But interesting setup is for Bank Nifty. Bank Nifty has witnessed the long build-up in the previous trading session, and almost looking at the data setup, we do believe that Bank Nifty can give further more support from current level, and possibly 44,500 could be the immediate target for Bank Nifty in the continuation of this uptrend which we are seeing since last couple of weeks. So Bank Nifty as well as Nifty both are on the buy side. For Nifty, we are projecting target of 18,780 to 18,800. The keep stop loss of 18,680 to remain on the long side for Nifty. And for Bank Nifty, we are projecting target of 44,500. Stop losses should be around 43,950. So both indices are looking promising, and the data setup in the previous session was clearly indicating that yes, this rally can extend, and we are going to have a new all-time high for Nifty very soon.
Okay, let's talk about some stocks as well. Kunal, what's going to lead us higher? What should one go long on?
So of course, large cap stocks would be the ones which should be preferred bets, but then I'm betting on the momentum ones and the likes of DLF, for example. The real estate sector has been doing exceptionally well. DLF has also done reasonably well. So almost a month back, the stock confirmed a breakout of its golden crossover where the 50 DMA crossed above the 200 DMA. That was almost at 420, 425 for DLF, and the stock is now crossed the 500 mark, which means the trend, the momentum is quite strong. Would expect the stock to head towards 525 near-term targets. Stop loss for this trade could be kept at 488. Havells is the other stock which also has done reasonably well from 1200 levels to now 1350 approximately. Looks attractive because of the way the last 1 week of setup is. It's almost a consolidation for Havells over the last 1 week. So I'm expecting a breakout and almost an 7 to 8% up move. 1450 as a target, stop loss at 1300.
Okay, so Havels and TLF, these are the two top picks coming in from Kunal. Rajesh, what about you? What are the stocks that you're identifying?
So first stock is Aditya Birla Fashion Retail. Stock has recovered from its oversold trajectory, and on the weekly chart, stock managed to give breakout of its falling channel on the weekly chart. Looking at the long built up in the previous session, we do believe that Aditya Birla Fashion Retail can continue furthermore upside from the current level. The strong buying interest was there in the previous session. We expect a target of 225 in the near term. One can keep a stop loss of 202. Another stock is the same. Kunal has already covered that DLF. We are bullish on real estate space. So DLF is the pick where we are projecting target of 525, 530. The stop losses is 490. The whole space is moving up. So Lodha, Prestige, Shobha, all stocks are showing good traction. So we believe that real estate space can continue further more momentum from the current level. Another stock is from automobile space, that is Ashok Leyland. Stock has completed its consolidation, and now looking at the data setup, we believe that that the stock is now poised for giving breakout of its multiple supply zone on the daily as well as on the weekly chart. Looking at the data setup, we expect that Ashok Leyland can scale up to the target of 160 to 165. One can buy this stock with stop loss of 151.
Okay, let's move on. We will address all the stocks in news as well this morning. But as you know, ET now continues its 14-year celebrations this Friday with exclusive interactions featuring top leaders of India Inc. Here are a slice of the conversation we had with Sanjeev Bikhchandani, co-founder and vice chairman of InfoEdge, where he shares insights on Zomato's journey towards profitability and more.
So, look, we look at the underlying. We look at how the business is actually doing, right? Now, Zomato listed at, it offered in the IPO at about 76 rupees. The share price went up to about 150. I don't recall how much it went up to. That was in the aftermarket. Globally, the market corrected. Indian markets corrected a few months later. Zomato corrected. It went down to somewhere in the early 40s when the lockup expired. It's back up to roughly the IPO offer price right now. I think a couple of days back, as the company performance goes on improving. So at least some of this is global trends. Some of it is is a reduced appetite for public market investors in India to continue to hold loss-making startups. A definite signal to Zomato and Policybazaar, guys, get to profit, which is what they're trying to do, and I think they're succeeding. So some of it is that, I would not worry too much about share price if you're a long-term investor. If the company underlying metrics are good, it'll get back.
Some of the exclusive details that we are getting for you. We understand that Tesla has been looking at deepening its presence in India, but what is it doing with respect to making the tie-ups with certain OEMs? What have been the conversation like with the government officials? Let's go across to my colleague Prakash. He's joining us with the latest on this story.
So the government officials are informing that it was an excellent meeting with the Tesla officials when they were here, and discussions are moving in a positive direction. The government is evaluating on various aspects before commenting anything on record, but the sources are confirming that the Tesla has shown keen interest on India. And discussions are also going on in the finance ministry on various aspects. When it comes to provide incentives, which has been their key demand, sources are informing that it will come with various conditions. Government wants Tesla to consider India as its potential production and innovation hub. Tesla has also shown interest on the proposal of the Indian government to establish a vendor base here in India. As you are aware that Tesla has a strong vendor base, including manufacturing facilities in China at present, but it is the fact that Tesla has now recognized the potential of India, and it is exploring various opportunities to enter in the Indian market.
And Maruti is set to launch its costliest vehicle ever on July 5th. That's called Invicto. This will also be first Toyota vehicle that is going to be rebadged and sold through Maruti Suzuki's outlets under the global Toyota Suzuki Alliance. Now, this premium multi-purpose vehicle that will sit above the Grand Vitara will be sold via the Nexa outlets. In fact, my colleague Sumit Chaturvedi spoke with Shashank Srivastav, and here's what he told him.
So we will have to wait for some time to see the booking trends and what are the trends post the price announcement before we come to a conclusion about what the stable demand would be. But really this segment overall, if you look at the 3-row SUV MPV segment, was about 258,000 last year, out of which in the premium side, which is greater than 20 lakh category, was about 110,000. So the volumes are, there are 8 players in this segment, including the Karens, the Alcazar, the Hector Plus, the Scorpio and the XUV 700 and so on. So the volumes may not be very large, but it's also a good way of participating in a segment which is rapidly growing. The greater than 10 lakh category has grown to be 5% of the industry. It was just 1% a couple of years back.
And so, looking at overall market, this is going to be only automatic variant as we understand.
So the variant strategy and what all the variants will be available at what prices we'll be announcing on the 5th of July at the time of launch of the Invicto.
Okay, so that's the latest launch coming in from Maruti. But on that note, slipping into a very short break, don't go anywhere.
Back with the market, right here on 80 now, the SGX Nifty indicating a mildly positive start, and we seem to be in good momentum. We're already at that 18,700 print once again. But let's talk about all the stocks and news this morning. And the RBI may soon be tightening norms for unsecured lending by regulated entities. Now, we at ET Now have learned from sources that the regulator may increase risk weightage for unsecured lendings. Ankur is here with more on what his sources are telling him.
Yes, the Reserve Bank of India may announce a tightened norm for unsecured lending, and what we understand is that these announcements are likely to be made very soon, as sources have told us that there has been meetings which has been held between bankers and the regulator has already taken details of such portfolio by the banks. In fact, they had asked for monthly data of such unsecured lending and how much growth has happened in the past. Although the regulator never intervenes in the kind of growth or there is no X number which has been given by the regulator to the lenders on this much growth should happen. But all in all, the regulator wants that even with the fast pace of the growth, the balance sheet of the banks should be secured. And in some instances, especially with few banks, the regulator has found that the practices which has been taken by the banks may not be suiting to its balance sheet, and therefore a tightened norms may be announced by the regulator. The announcements could include increased risk weights for the banks for such kind of lendings. Remember, unsecured lending refers to personal loans or credit card outstandings, and if at all there is an announcement by the regulator on such norms, the impact will be on banks, NBFCs as well as the credit card companies which are giving such kind of loans.
Thanks, Ankur, for that. But we were just discussing how perhaps this rally would take a pause when the IPO frenzy and the supply frenzy really begins. But what's the scorecard like for the last frenzy that we had seen of IPOs when all of these new age tech companies had come up with their IPOs? Let's take stock of all of that. Somit is joining us with that analysis.
Well, if you see in the last 3 financial years, more than 100 companies had come out with the IPOs. But let's look at the scorecard of how they have performed so far. So in FY21, if you see out of the total 30 companies that came out with the IPOs, 7 of them are still trading below their issue price, while 23 of them are above the issue price. Of the 53 companies that came out with their IPO in FY22, nearly 24 of them are still trading below their issue price. And of the 37 companies that came out with their IPO in the last financial year, that is FY23, 11 of them are still trading below their issue price. Now, if you see the companies that are trading significantly below their issue price, firstly on the list is Card Trade, and it's trading nearly 67% below its issue price, and that's owing to expensive valuation and muted growth that we have seen since listing. For AGS Transact, it's the losses owing to higher provisioning that has led to a 66% fall in the share prices of the company compared to its issue price. For Fino Payments, it was the increasing competition and volatile margins that led to this fall. And for Paytm, it was the losses, expensive valuation, and the rising interest rate. And for Surya Small Finance Bank, if you see, it was the asset quality challenges, elevated credit cost, and margin contraction that led to a 50% drop in the share prices compared to its issue price. Apart from that, there's Aditya Birla AMC, Shriram Properties, Star Health, Hiranba Industries, and Ellen Electronics that have fallen nearly 40 to 50% compared to its issue price. Now, however, there are some gainers also. In fact, gainers on the list are much higher compared to the losers. And on the gainers list, first on the list is Mazgaon Dock, and that's largely owing to the fact that the government's focus towards procuring products from the domestic market has increased sharply, and this has also led to a sharp rise in the share prices of Mazgaon Dock. In fact, it's not only Mazgaon, there's also Paras Defense and Data Patterns on the list. All three are defense companies. Then there is MTAR Tech, which has gained nearly 235% compared to its issue price, and that is because of its focus towards renewable energy. Then there is Happiest Mind, which has grown on the back of strong growth, which has led to this strong performance. For Angel Broking, it was the rising user base along with this rising market share has also aided the rise in the share prices of Angel Broking. Then there is Likhita Infrastructure, Hariom Pipes, Root Mobile, Venus Pipes. So specifically for Venus Pipes, if we see, it's the capacity expansion, rising volumes that has led to this rise in the share prices of Venus Pipe as compared to its issue price.
Samit, we'll leave it at that. Well, India has seen, or rather is being seen as the sweet spot amongst global investors clearly, and that's also the word coming in according to DP Singh, the Deputy MD and Chief Business Officer at SBI Mutual Fund. While speaking with ET Now's Anurag Joshi, he shared that the momentum of gains in India's equity markets will sustain.
There are a lot of headwinds in the other developed countries. So India is being seen as a very, very sweet spot at this point of time because of our internal demand, that is number one. And number two, because of our geopolitical strategies which country is playing around, which gives us a lot of tailwinds actually, which we are importing oil at a very, very competitive price. We have a lot of our foreign exchange reserves are again touching almost $600 billion. So all these are very, very sound signs. Most of the countries who are affected with the conflict, their currency position or their balance sheet will not be as strong as our balance sheet is. So that gives another sense of comfort to the international investors. So I am sure that this momentum will continue.
And do you see any change in global allocations from global equity funds to India because of this particular factor?
There are two parts of it. One, the overall kitty for investment in foreign countries by those economies has shrunk what it was earlier. But at the same time, there's a great attraction for Indian market, Indian stocks, India as an economy. So naturally, even at the shrunk wallet size of the foreign investors, with the higher allocation, they are looking at India in a much better way because they feel.
Okay, let's pose exactly that question to Dipan Mehta as well. Dipan, hi, morning. Good to have you on the show. The rains are here and it seems like the momentum is back once again. Where at 18,700, seems like this time maybe we could give an attempt to that all-time high on the Nifty.
Yeah, absolutely. Good morning and thank you for having me on your show. And as I had said many times on your show that monsoon is the best time for capital markets. I can say that with my 30 years experience that these are the great times for stock markets on most monsoons. And I'm very certain that this monsoon we will see the markets at significantly higher levels. I'm not just talking about breaching the previous highs. I'm talking about maybe 5-10% higher high than the previous one. So these are great times. We are seeing fantastic liquidity flows coming into the equity markets, and the selling from the FIs is certainly dissipated completely. And the most important thing is that the portfolios are doing really well. The way the small mid-cap stocks are jumping up, be it on positive news flow, be it on institutional buying, there are many reasons. But by and large, I think investors are really a happy lot, and their patience has been rewarded in a handsome fashion with the kind of returns generated over the past 2-3 months.
Okay, here's some interesting data, Dipen. You just may want to be with us. What we've done is that we've looked at the P multiple, the current, the 5-year average, and the peak P multiples at which the Nifty, the small cap and the mid cap index historically have peaked out. So what we are looking at is the current multiple, the 5-year average, which includes this entire COVID cycle, and that's a reasonable estimate. And then we've looked at the period at which these indices historically have peaked out. Now, the Nifty is 1% away from an all-time high, mid cap is at an all-time high, small cap index is 12% away from its all-time high. You want to look at the P multiples, not the returns over the years. The P multiple, I think, is what is important. So, Dipen, here's how the data looks like. If one looks at the Nifty current P multiple, Dipen, it is below the 5-year average. The Nifty Midcap 100 index, it is nowhere close to its peak and it is still below the 5-year average. And the small cap index, Dipen, is at 14.5 12-month forward, and again it is below the 5-year average. So can I safely say that there is a really long way to go before this market peaks out purely based on valuations?
First of all, Nikunj, thank you for this fantastic analysis. And it just it builds my conviction of very good times for small mid-cap companies and overall our equity market going forward. And I think the wild card here also is the earnings. And largely, I think because of lower inflation, raw material prices stabilizing to slightly declining, and a lot of the companies have already taken price increases in the past few months or so on the back of rising inflation. I don't think we are seeing that many price cuts going ahead. So we could see expansion of the operating profit margins as well. And that in turn leads to higher return on capital employed, and that in turn justifies higher price to earnings multiples. So I think what we have over here is a beautiful virtuous cycle of rising profit margins, rising return ratios leading to higher P multiples. And all of this, I think, is going to catapult our markets to newer highs. And I think this is the best time. I think if you have got less allocation in equity, I think these are great times. I sense that there's going to be a breakout in the larger indices over the next few weeks or so.
Okay, but like any other market peak, what we were discussing also is the intriguing factor this time around that the blue chips of the blue chips haven't quite participated yet. Be it Reliance, be it HDFC Bank, be it Infosys, TCS. Tech, of course, can be clubbed within the underperforming pack for various other reasons. But Dipan, when do we see a push coming in from HDFC Bank and Reliance?
So I think these are very large counters and they require heavy institutional flows and I think more likely FPI flows to move these stocks higher. They have been in a way outperforming, at least Reliance Industries has been, if you take a multi-year view, like 5-10 year type of a view, then certainly Reliance has been driving the Sensex and Nifty much higher. And I think that it's just a matter of time before these stocks also start to get their rhythm right. And coming specifically to HDFC Bank, I think the big event that we're all waiting for is the merger. And when these stocks will start trading on a merged basis, that means HDFC is supposed to be delisted or gets consumed by HDFC Bank. And that I think will give a clearer picture of what the financials are. I think that there is still some confusion in the minds about institutional investors about the weightage of these companies within the broader indices. I think all of those uncertainties will get sorted out once we have a merged entity listed on the exchanges. And I think that could be a big trigger for the stock price of the combined entity to move much higher. In any case, I think economy is doing very well. Banking stocks and banking industry also is doing very well. The demand for credit is good. And HDFC with its brand and technology is going to be a big beneficiary. In any case, I think they have extremely attractive CASA ratios and are able to generate resources at a very low interest rate, and that's a key strength in a competitive industry like banking.
So on my radar, first is Tata Com. Why do I have Tata Com on my radar? Well, the stock yesterday really went through the roof. It's made a new high, almost a new high, And Tatacom is one stock which is up 23% in June itself. Best monthly gain since July 2020. They had an analyst day where they did speak about how the data business actually could double. Now, unlike what is happening in the IT sector, Tatacom is in a position where the data and what is happening to the IT service sector cannot be compared. The data business of security data delivery in the network system, I think, is growing. And for IT companies, it's a slowdown which is happening in the BFSI space, and the cloud business, I think, is not growing at the rate at which market had anticipated. So Tatacom, in a sense, has moved out to be one of the standout gainers. The point is, what do you do now? Yesterday, the stock went up because of this buzz of MSCI, but my sense is that Tatacom now is trading above the most consensus price target for most of the brokerages. Second, the data growth is not going to be a one-quarter phenomenon. It's going to take a couple of quarters before that growth comes back. C, they will have to lever up their balance sheet. So my sense is that in the near term, best part of the earnings and the stock re-rating could be behind us. So the surge in the Tatacom may not be really lasting for a long period of time, given what they've indicated in terms of where the balance sheet is moving and how things are moving. Second, I've got SBI Cards. Margins nearing a bottom as rate cycle peaks. This is something which we should historically understand about credit card companies. When the rate cycle or interest rate cycle is strong, credit card companies will always have a problem in terms of margins. Unlike banks where they benefit when the rate cycle starts, especially the large banks. In credit card, I think it's the reverse. SBI, I think SBI Card has been in standout franchise there. Their book, I think, is of excellent quality. The stock was the haloed stock. It's not really the haloed stock now. And then if one really looks at the CAGR growth of the industry, the retail digital spend, I think, is growing at 47% and is projected to go at 30%. So I think this really could be the dark horse going forward, looking at where one of the big beneficiary of the rate cut cycle would come. So Dipen, I'll take my chances. Tatacom stroke SBI Cards. You track both of them, none of them, one of them, you can choose.
No, I track both of them. I have invested in in SBI Cards, still remain invested in Tata Communication. I had invested for several years, and then I threw in the towel because the returns were just subpar. You know what is the common thread between both these companies? They have both lived below their potential. Tata Communications, I think they've been talking about this data story for many, many years. Rise in data traffic is not a new phenomena. It's been there right from last 4 or 5 years or so. It's been picking up. And there was a beautiful opportunity during the COVID when data traffic really shot and went through the roof. So many more new applications went onto the internet, and we had the Zoom calls and the OTT, the proliferation of OTT channels. That has all led to higher data consumption. But look at the way Tata Communications data business has shaped up. It is still in that low to mid single digit type of volume growth. Margins also are pretty much flat. From time to time, they do talk about this business and how it has the potential to scale up, but it always disappoints when you see the actual numbers on the ground. That is as far as Tatacom is concerned. SBI Cards also, for some reason or the other, has not lived to its full potential. Sometimes it is the revolver lending that has slowed down. Sometimes it is some exceptional provisions which they have to make. Something or the other is not going right for SBI Cards. But I have more hope in SBI Cards than Tatacom at this point of time. And one point in SBI Cards, which perhaps has been missed over here, is this linking of credit cards to UPI. So if you have a RuPay card just now, you can link it to your UPI, and every time you make a payment, instead of it hitting your savings bank account, it will go and hit your credit card. And that way you can earn points and get at least a few weeks of credit on the spending you have taken place. And as and when they get Mastercard and Visa also on the UPI platform, that will be a very big positive trigger for all credit card companies. And credit card business per se, I think globally also is exceptionally good business, and with very high net interest margins and good volume growth as well. So very positive on SBI Cards. Again, a disclosure here that we and our clients are invested, but not so much on Tata Communications, only because of its track record.
You track the charts of Tatacom and SBI Card. What are they reading?
So Tadacom was one of the recommendations which I think which you'd given at 1250 odd levels. It's done reasonably well, but I think now at 1650 mark, it doesn't make sense to initiate a buy on Tadacom. There are two reasons for it. One is because of the way the stock inherently has been. It's been a traditionally moderate beta kind of a stock, and in the last 1 month, the stock has risen up some 20-25%. That itself probably puts the near-term charts into a bit of an overbought nature in terms of indicators. And the second, the most important point is that Tata Communication at current levels of say 1600 approximately is almost at a 350 point plus divergence from its 200-day moving average. That's a steep 25 to 30% from its from its long-term moving average. That itself makes the trade a bit more steep or extreme at current levels. So that's one of the reasons why that's a couple of the reasons why I would believe that Tata Communication at current levels could be good enough profit booking candidate rather than building up fresh longs. Yeah, but if the stock corrects say another 5 to 10%, then it could probably be a good buy on dips kind of a strategy. SBI Cards, on the other hand, the stock is just breaking out of its consolidation. I think last week the stock has given a golden crossover where the 50 DMA has crossed back above its 200-day moving average, and more importantly, the slope of the 50 DMA is also quite steep enough, indicated that the stock should rally up at least another 5 to 10% over the very near term. So SBI Cards could be something to look out for, possibly with a target of 1050 to 1100.
Okay, so that was about Tata Communication and SBI Card. But Rajesh, wanted to ask you about a couple of breakout counters that we saw yesterday. Laurus Labs, as well as we saw quite a bit of surge on macro tech developers.
So Laura's Lab, yeah, this is a third consecutive month where stock is forming higher high-low formation. It clearly suggests that the stock has completed its base formation from oversold territory. Now stock is in recovery mode. So looking at the setup for near term to short term, we believe that Laura's Lab can continue further more upside as the breakout is clearly there on the weekly as well as on the daily chart. We expect a target of around 395 to 400 in the continuation of this pullback rally which we are seeing. One can buy this stock also with stop loss of 345. Macro tech developer, yeah, very strong breakout we have witnessed in the stock. Most of the stocks from that segment is continuously moving up, and the stock managed to give breakout of its multiple supply zone on the weekly chart. So looking at the chart pattern, if stocks continues to hold above 640 level on a weekly closing basis, then possibly next target for the stock could be around 750 to 800 in the continuation of this uptrend.
Okay, Rajesh, so that's the take coming in as far as Lodha and Laurus Labs is concerned. We let you go on that note. Appreciate you joining us on the show. But Dipan, I wanted to come back and speak with you about the entire QSR space. Yesterday as well, we saw quite a bit of up move on the likes of Devyani International. Sapphire Foods is also coming back. Is this a space that interests you?
Absolutely, again a disclosure here. But what we like is that this is the new FMCG stocks. I think when you want to play the consumption pattern, then the QSR industry is a perfect play on rising consumption, changing habits, changing tastes, and also I think the runway for growth for these companies is phenomenal. The balance sheets of most QSR companies also is in solid form, so which means that they can keep on adding to the distribution network without too much of a burden or even taking on debt for that matter. They have free cash flows to support any expansion. And these are going to be great businesses 5-10 years down the line, purely on account of delivery, on account of new restaurants which they will open in tier 2, tier 3. And look at the way I think the highway network also is shaping up within India. I think that's a huge opportunity for QSR companies. As you know, more and more Indians travel by road, there will be requirements for more and more such pit stops where you can have these QSR restaurants, as we have seen in the developed countries. So very positive on these on the sector as a whole. It is a bit expensive, and we have to admit that last quarter was definitely soft for the industry because of a lower consumer demand. So I think it will have its ups and downs. There will be minor cycles within cycles as well, but the long-term trajectory is very good for QSR. And I think if you remain invested with a longer term view, 3 to 5 years or so, these stocks could certainly give fantastic returns, at least outperforming the benchmarks.
So the long-term outlook remains very strong for the QSR names, but what are the other ideas coming in? Let's listen in to the fundamental bets coming in from Sanjeev Bhasin and Pankaj Pandey.
The dollar is headed lower. Jindal Steel becomes an extremely good attractive buy at this price along with Tata Steel. And in copper, I think Hindalco and the best numbers were of Hindustan Copper. I think if you have a 3-month period, these stocks can give you a 20% return as both ferrous, non-ferrous come back on the table with China spending and the underperformance coming to an end. Piramal Pharma, this is my dark horse play for 2023. Their CRAMS, their API and their CGS businesses are starting to show a lot of expansion. Yes, there was this overhang of debt which has risen, plus they've had a higher taxation, but the Piramals have issued warrants at 126. So at 72 rupees, Piramal Pharma is a steal. And I think this stock can double in the next 1 year, notwithstanding that the original business of the Piramals was pharma before they sold a blockbuster drug to Abbott and then they diversified. So if you ask me, Divi's is going to be an outperformer, but Piramal Pharma is my dark horse for doubling in the next 1 year.
We are very selective in this real estate space, largely because the overall macro tailwinds are sort of turning better because we have seen 250 bips kind of a rate hike. So home loan rates have crossed 9% for most of us. I think that is sort of trending lower going forward with inflation not really looking to look higher. So that is one thing. And I think we are very selective in the space because what we like is something like Brigade Enterprises or Mahindra Life space. I think largely because of their selective exposure in some markets. So, for example, we are still not comfortable recommending Oberoi. I think Thane launch is still sort of pending and it's still into one particular market. So we are looking at companies or we prefer companies which are there into multiple markets. So accordingly, I think Brigade Enterprises looks best because I think they have very little debt on the residential side, which is what ideally it should be. And Mahindra Life has been sort of meeting the targeted land acquisition targets. So from that perspective, these two companies are the top bets in the real estate space.
The Bank Nifty has made a new high about 4 weeks ago, and Nifty is yet to chip in. So if markets to go higher, will it be Reliance? Will it be HDFC Bank? Will it be Infosys? I don't know, but you need a heavyweight to fire. Vishali, what's your sense? Do you think a breakout on the Nifty is around the corner, and after a breakout, this market will still go places?
Very good morning. So I think, yes, the indicators are all looking very positive. And ever since we've seen Nifty crossing 18,650, we have been quite bullish on it because we have our next projected target for this week is 18,800. And we are pretty much close to that. So I would continue to have a bullish view for the same. But we also need a participation, one more round of momentum to come in from the banking stocks. So I am betting on HDFC Bank as well.
Where is Reliance headed, Vishali? Because it's one heavyweight which actually has 10% weightage.
So Reliance has already begun, and I think I would look at a target of 2650 from here on.
Okay. Some more breakout stocks. You've got Devyani International, Pidilite. Nothing large actually. Nothing very. No, I'm just Anything else which is on your radar, Vishali?
Yes, definitely. So I just before I joined, I heard someone talking about Tata Communication. Well, I am quite bullish on this stock even now. And yesterday was a recommendation from our end as a trading strategy, and it gave us a very robust close yesterday. So I would say that those who are holding should continue to holding this stock because I'm looking at a target of 1700 from here on. So not near. I mean, it would not be a runaway rally because that's what we saw yesterday, but stay invested in this. And likewise, I am looking at now hotel industry, hotel stocks. If you were to see Oriental Hotel, yesterday, anyways, the trend is so strong. So I'm looking at Oriental Hotel currently at 92 with a 86 as a near-term support. I think this stock is ready for a takeoff for a target of 100 as a trading strategy.
There are some trading strategies coming for you. Tata Communication continues to be quite bullish on that, and Oriental Hotels too. Dipan, I wanted to talk to you about a sector that we usually did not, and that is the entire power space. It's coming back into action. We have seen decent amount of rally in these names. Would you look at these names as a long-term bet and the entire energy transition theme?
See, I think power companies clearly are in the focus because of rising installed capacity, and almost every single power utility is looking at increasing its footprint by adding more and more renewable capacity. NTPC, I think, is an interesting case. We are seeing a lot of interest in PSUs. NTPC has been a multi-decade underperformer, but now I think with the way the demand for power is shaping up, and that company also looking at aggressively expanding its renewable portfolio, and that should certainly drive higher interest in the stock. So from a purely valuation perspective, and especially if you have a kind of a value strategy, then NTPC should do pretty well for you, at least give outperforming returns. But by and large, I think these are utility companies, and one cannot expect some multi-bagger type of returns from these stocks. And our focus right now is more on growth companies. There was a time to buy value companies maybe 2-3 years ago, and they've done well. But I think this next phase of the bull market will belong to the growth companies. So we're looking for companies which can grow 25-30% or so top line, bottom line, small, mid-sized companies within the sectors, chosen sectors. I think those will give a significantly higher return, and then there is scope for even exceptional returns due to stocks doubling, tripling also.
A couple of those ideas, high growth companies, apart from the ones that we've already discussed.
Yeah, well, I know the minute I said this question, I knew the next one was which were the high growth companies. It's like a bit like putting your foot in the mouth.
Into it, Dipan, pretty much. You baited us into it, so now tell us the names as well.
See, there are so many, compliance issues over here. And again, disclosure, I must have said it many times in this interview. But we like this entire capital goods space. And two companies which come to mind, which are quality players over there. One is Praj Industries, which of course is pursuing the ethanol opportunity. And second is VA Tech Webac. That's been also moving up, scaling to new highs. We all know the importance of water. I think it is front and central with every agency, state, central, as well as private sector. And VA Tech Webac is a quality player in water projects. They have an international footprint as well. Both the valuations, I think, compared to the business dynamics are reasonable, and they are sitting on multi-year order book positions, which we like. So I think there's good earnings visibility as well. But again, I think, these stocks have run up. One must, be a bit careful and do their own due diligence before investing in them. But like that, I think there are many such engineering companies. I think Triveni Turbines comes to mind, ISJEC comes to mind, I think, which are available at reasonable valuations, but have great potential in terms of the way the capex cycle is shaping up, with private sector also now getting into the act.
On that note, we let you go. Thank you so much for joining us today and talking to us about a whole host of sector. But remember, it's the anniversary week for ET Now here. Unlock a golden opportunity with us on our 14th birthday. Here's a gift for you as well. Participate in ET Now's Force of 14 contest and stand a chance to win 14 gold vouchers. On our 14th birthday, all you have to do is watch ET Now throughout the week and give a missed call on the number flashing for you on the screen and grab this golden opportunity. Today's first question is, which popular show on ET Now focuses on personal finance and investment strategies? The options for you are there on the screen. Is it The Market Edge? Is it Wealth India, Market Gurukul, or perhaps The Money Show? You just have to give a missed call on that number on your screen and answer the questions correctly.
ET Now has turned 14 and the golden celebration is on us. Watch ET Now on 12th to 16th June during the market hours from 9 a.m. to 12 noon. All you need to do is just answer one question every hour. To participate, give a missed call on 888 59273 and answer the question. 14 winners will stand a chance to win gold vouchers. It's raining gold with ET Now. Rise with India.
Okay, but let's get some mid-cap ideas as well from our charters. Kunal, you go first. What's the mid-cap idea?
Ujjivan is a stock which I would highlight. I think it's been an exceptionally strong performing name over the last 4 to 5 months. It's moved down to almost 396, 397 yesterday. So would suggest a buy on Ujjivan. The momentum is extremely strong. Near-term charts are also extremely positive for the stock. Would suggest a target of 415, stop loss at 380.
Let's tell you what else is happening outside the world of business. And on the latest update, former US President Donald Trump pleads not guilty in court to charges of retaining classified US government documents even after his tenure. A legal battle is likely to play out over coming months as he campaigns for 2024 presidential elections. Also shifting focus, global technology services Accenture aims to create AI-specific solutions for 19 different industries. The company plans on adding its AI talent to 80,000 professionals via a mix of hiring, acquisitions as well as training. And Netflix will soon be launching a pop-up restaurant in LA, that's Los Angeles, on June 30th, calling Netflix Bites. The food concept will be built around an elevated dining experience which will portray chefs featured in various Netflix food shows. The pop-up is something of an extension of Netflix's push into retail and experiential content following successful activations based on IPs like Bridgerton and Stranger Things. Meanwhile, Disney has announced a major rejig in its release dates, adding a new Star Wars movie and Moana, live action adaptation to the schedule and delaying the next 3 Avatar movies by a year. In fact, based on the recently rejigged timeline, the final Avatar movie is coming 22 years after the original 2009 blockbuster.
Okay, a meteor accident occurred at Tata Steel plant in Odisha's Mera Mandali. The 19 people were seriously injured due to a steam pipeline burst. Now, all 19 have been admitted to a private hospital in Cuttack. An inquiry and investigation have been initiated on the matter. Manchester United shares depth soared in a trading session yesterday over 10% after reports suggested that a bid from Qatar was likely to be accepted. Now, Qatari media reports have suggested that Sheikh Jassim, the son of country's former Prime Minister, is poised to be announced as the preferred bidder of the Premier League football club. His final offer was reported to have been around a whopping $6.3 billion for total control. And on to the latest coming in on the cyclone Biparjoy. The death toll has gone up to 5 and more than 30,000 people have been shifted to shelter homes in districts of Dwarka and Kutch as the cyclone is expected to make a landfall tomorrow. IMD has warned that after turning mild, this cyclone has the potential to pick up pace and cause massive devastation in low-lying areas.
Well, it's that time on the show when we get you all the khabar from D Street, and the buzz is that QSR stocks are seeing interest from domestic investors as inflation cools off further. Vinny joins in with more updates on the same. Vinny?
Good morning. And obviously, QSR space, when you look at it, whether Westlife Food World, Jubilant Food, Devyani, Sapphire, all this has seen a lot of interest coming in from domestic investors. Strong buying coming in on all the QSR space names from domestic investors. Now, what factors actually come in is that, let's not forget, Q4 was a bit of a disappointment coming in for the QSR space owing to the subdued demand that they saw post the festive season. Higher raw material costs was still a factor that came into play for a pizza maker, especially you saw cheese prices being high as well. Now, on the positive side, we're seeing that the May CPI data, that's at a 25-month low. Inflation is cooling off. In most of the products, whether you look at it like chicken, oil, wheat, packaging, all that has seen a decline coming in. Even milk prices now are coming off. So, yes, that indicates that, cheese price also could start coming off as well. And that would work out well for QSR players going forward in terms of the margins, that we could start seeing an improvement coming in as well. And obviously, that does merit in terms of more interest coming in from domestic buyers as well. Let's not forget, in terms of the demand trends coming back as well, in terms of the seasonality factor that comes into play in Q1 for the companies as well, especially in terms of IPL, summer vacations, holiday season, all that works out well for the QSR space and indicating that we could see the demand coming back. A lot of analysts have highlighted that demand could come back in the second half of FY24. So a lot of positive demand trends, inflation coming off as well, are key factors that would play out for the QSR space.
The QSR stocks are something that we'll watch out for, but what are the other stocks on editors' radar? Listen in.
First is Tata Com. Why do I have Tata Com on my radar? Well, the stock yesterday really went through the roof. It's made a new high, almost a new high. And Tata Com is one stock which is up 23% in June itself. Best monthly gain since July 2020. They had an analyst day where they did speak about how the data business actually could double. Now, unlike what is happening in the IT sector, Tatacom now Tatacom is in a position where the data and what is happening to the IT service sector cannot be compared. The data business of security data delivery in the network system, I think, is growing. And for IT companies, it's a slowdown which is happening in the BFSI space, and the cloud business, I think, is not growing at the rate at which market had anticipated. So Tatacom, in a sense, has moved out to be one of the standout gainers. The point is, what do you do now? Yesterday, the stock went up because of this buzz of MSCI, but my sense is that Tatacom now is trading above the most consensus price target for most of the brokerages. Second, the data growth is not going to be a one-quarter phenomenon. It's going to take a couple of quarters before that growth comes back. C, they will have to lever up their balance sheet. So my sense is that in the near term, best part of the earnings and the stock re-rating could be behind us. So the surge in the Tatacom may not be really lasting for a long period of time, given what they've indicated in terms of where the balance sheet is moving and how things are moving. Second, I've got SBI Cards. Margins nearing a bottom as rate cycle peaks. This is something which we should historically understand about credit card companies. When the rate cycle or interest rate cycle is strong, credit card companies will always have a problem in terms of margins. Unlike banks where they benefit when the rate cycle starts, especially the large banks. In credit card, I think it's the reverse. SBI, I think SBI card has been in standout franchise there. Their book, I think, is of excellent quality. The stock was the haloed stock. It's not really the haloed stock now. And then if one really looks at the CAGR growth of the industry, the retail digital spend, I think, is growing at 47% and is projected to go at 30%. So I think this really could be the dark horse going forward, looking at where one of the big beneficiary of the rate cut cycle would come.
Okay, let's address another piece of corporate news. And telecom giant Vodafone Vodafone Idea is mulling on reviving its business plan by infusing nothing less than 14,000 crore rupees of equity. In fact, as per the plan submitted to the government earlier this month, ABG and Vodafone Group will soon be investing 2,000 crore rupees as fresh equity in the company as well. We have with us Deboshi Chaki of the Economic Times, who's connected with us right now and has some more details. Deboshi, help us understand what exactly is Vodafone Idea's plan, because this is a sizable fundraise that they're looking at.
Yes, that's right. Like we have mentioned, the company will infuse equity to the tune of 14,000 crore, of which we must remember that 5,000 crore has already come from the Aditya Birla Group and from Vodafone Group PLC UK. The remaining 2,000 crore, which is part of the promoter's commitment of 7,000 crore, will come very soon. We understand talks are already underway with banks and the funds have been tied up. That should come, within probably in a matter of months, if not more. The remaining 7,000 crore will be raised from external investors. Talks are still underway. We understand the company is engaged with at least three investors, most likely foreign investors. The structure of that investment is still under discussion. It could come as direct equity, or it could also come as a structured credit transaction with a convertible structure, which will eventually allow the investor to convert the debt, which it will infuse into equity going forward once the business revives. Another important aspect of the business revival plan is an additional loan of 25,000 crore, which Vodafone Idea is seeking from domestic banks, comprising of PSU banks, private banks, and also possibly some foreign banks. That 25,000 crore will be used towards capex upgradation mainly towards 4G capex upgradation. As we all know that the company has been losing a sizable chunk of site subscribers because of for them not being able to infuse a significant amount of money in improving their capex and services. So all these factors are currently under consideration. We understand the business plan was submitted to the government a few weeks ago. We are still awaiting a further clarity whether this is the final plan or this could possibly be tweaked into some more factors, some more aspects to be incorporated.
Okay, Debarshi, we'll let you go on that note. Thank you so much for joining us. So we'll keep an eye out on Vodafone Idea today. But what about the index itself and what are the index calls coming in from our charters? Let's track that. It's a buy strategy that Kunal has recommended, and similar is the case with Santosh as well. However, Kush is a bit more tentative. He's suggesting to hold your positions on the Nifty, so consensus buy. As far as Nifty is concerned, similar story coming out for Nifty Bank. Santosh and Kunal recommend a buy, and it's a hold coming in from Kush Bora.
All right, where is the Nifty? Where is the Bank Nifty? We may not have the ring of a new all-time high right at the bell, but hopefully somewhere either today or later this week. That's what I'm hoping for, because 170 points is frankly nothing. 2% in Reliance, 2% in HDFC Bank, 2-3% in another heavyweight. 170 points done, right, Kunal? Simple.
Yeah, I think the average range for the index, the ATR, which we typically term it as, it's almost 102 points, 103 points on the index, which means, assuming if we climb up to the new high, it will take maybe 2 days, if the trajectory is there.
Would you wager a bet?
Let's see. In the next 1 week, yes.
Okay, and what is on the wager?
Rasgulla, the pending one.
The pending one is the one that will come. Great.
Forever pending.
अब तो भाई 5 साल तो हो गए, रसगुल्ला वाला भी चेंज हो गया होगा.
I thought you had promised to get for him.
The Rasgulla store is near where
from
Kunal
Delhi.
lives.
Yeah, from Delhi.
From Delhi.
Yeah.
Delhi does
That's
not
how
have
it
good
started.
rasgullas.
Yeah,
Gopala Rasgulla.
Okay, fine, guys. Both of you get it. It's fine. Let's not fight for it. Both of you get
No, I
the
checked actually
rasgullas
the
and
airport. I
chola
checked at the airport. Out of stock. There's Haldiram counter. I thought I'll just get it for everyone, but out of stock. So Kunal, go back to Mumbai. At least.